Mic test, mic test. Hello, hello. It looks like the audio is working out fine. Right, in that case, let me just quickly go ahead and start off with the legalities here. So, disclaimer on screen. So, hello guys, and welcome to our 109th edition of the Trading Opportunities webinar. This is Nirav, admin and owner of 50eyes.com website, as well as the 50eyes Market Analysis YouTube channel, where this broadcast is currently being done live alongside my LinkedIn page. I'm not sure if it started broadcasting on LinkedIn. Sometimes they have an issue there. So let me just quickly check at my end. Looks like it is working fine on LinkedIn as well. Well, in that case, let's proceed with the quick about us part. So as I said, I'm the admin owner of 50eyes.com website, as well as 50eyes Market Analysis YouTube channel, where I've been doing these webinars since quite some time now. We generally do them once every Friday at 2 p.m. GMT or 7:30 p.m. IST. So whichever time zone you are in, just convert it accordingly. Right, and in the webinars conducted so far, that is in the last 108 webinars, we have so far captured 252 trades, which were all, of course, discussed live in front of you guys. And if you have been attending the webinars, you will see that 4 of the setups we discussed in the last one, that is the 108th webinar, also played out. We generally discuss 6 markets, and out of this 5, one was unclear, and 4 setups which were discussed have already worked. Now, of course, we'll go and check all that when we proceed with the webinar. Other than that, I'm also the author of the book Think with the Markets, available on Kindle platform, Amazon's electronic delivery platform, as well as of the course, author of the course, Complete Guide to Professional Trading with Elliott Wave, which has 1600 plus students, and you can check details for that here if you are interested in learning my methodology. And lastly, before we proceed with the actual webinar, here's a track record of my work over the years. As you can see, all the webinars and videos which I have done, I have compiled a track record of what I said and what happened over here. We have kept an record, and as you can see, the accuracy has remained more than 80%, going as high as 90 plus over the years. This is a track record of 6+ years consecutively, and after that, we have been starting our what do you call a weekly series. Now, with that being said, I think that's enough for an introduction, and we will proceed in this manner. If you are attending live for the first time, Euro USD followed by crude, gold, S&P, Nifty, and in the end, Bitcoin. If you have any doubts, you can ask me the same after I discuss my view on the instrument. Keep in mind the doubts or questions should only be focused on what we discuss. I'm not here to discuss your views. I think I've updated that in the chat section or something guidelines, something YouTube had to offer. Anyways, with that being said, let's now head over to our actual chart. First of all, on screen, gold has given me an alert on upside greater than 2030, so that actually becomes a long trade, right? So before we actually go with the webinar, let me just quickly do that at my end. 1 second. So I'm just going to enter a position on gold here, and then we will begin with the webinar as always. Done. So yeah, guys, as I was saying, we'll first go over the chart of Euro USD, followed by the other things. Gold we'll discuss when that number comes. So here's a chart of Euro USD. Hello Sushil, nice to see you again. And yes, gold is the talk of the town, and also just push the long trade on it, which we'll discuss as soon as we get to gold. So as I was saying, Euro USD, and before we discuss that, you guys already know we go over the past discussions. That is the analysis from 108th webinar. We will see what was being said. And after that, we'll go over the current chart. So this is the analysis from 108th webinar. The idea was literally what's currently going on, that we were expecting an A, B, C, D, E, and then a leg down. And I did very clearly mention that Wave D may have some downside remaining, which we will look to trade if we can below 1.07680. Minor short side alert, or what you call scalp alert for euro. Right now, that is exactly how things have played out on euro. So let's now actually look at the chart. Our discussion was on 29th of March 2024. Somewhere here. Yes, somewhere here we were discussing this market. So as I said, the D either was complete or had some downside remaining. So it did go down, completed the D, and has then gone up since for the E, which is, just to show you again, which is exactly what was our analysis last time. So picture perfect. And if you were able to follow it, good. We were actually able to capture some trades on it. Let me see if I can show that euro. There it is. There it is, our position on euro on as was traded in our Slack group. Traded scalp shots for wave 5 down and target minimum, blah blah blah, closed majority profits. And I think 90% were closed here, and then the remaining was wiped out by our trail. It was all posted live. Again, if you are not aware, you can find details on how to get access to our Slack group using the link in the description. Right. With that being said, let's see what's the current scenario here. The current scenario is, as I said, pretty much the same. And what we have here is, just to reiterate, a possible triangle in play. Triangle is Elliott wave pattern. In Elliott wave pattern will look something like this. And each leg is labeled with the A, B, C, D, and E. Once the E leg is complete, we wait for a move to the downside to take short trades. We can take trades at the break of wave D, which will be this place around 1.07228, or the more conservative setup is the break of wave B. Now we obviously will wait till at least the wave D is taken or somewhere near. If the market goes, I'll look for shorting opportunities. As you can see, I already have alerts placed here around 1.0766, but as I said, actual level will be 1.0724. Right. So considering that our analysis is precise, we will look for short trades below this level. Right. If something else is going on, then there are a couple of other scenarios which can play out here. For instance, one being that this is not a triangle correction, but something like this, a zigzag kind of correction, perfectly possible. And even in that case, I am expecting at least a movement, at least 50% of this leg. So we expect 50% of this, whatever it may be, it will at least take out this low, something like this. Right. So in either case, short-term scalp trade to the downside is visible to me. If the count plays out precisely, then it can go like this. If not, then at least small movement to the downside is going to be here. As for the precise targets, we can always check the 1:1, take the 50% and 61.8, etc. from this level. Not interested in doing that because it is a scalp trade. So not like you will wait for the precise targets. You will mostly just trail the thing. So that being said, that's our count, pretty much the same. Nothing has changed. And if you have any doubts on this current discussion, you can just post that in the comments. Otherwise, we'll just move over to our next chart, crude oil. And what's up with the chat? I can see There are people online, but what about saying hi or hello, guys, other than Sushil, of course? Anyways, let's head over to our chart CL. Interesting play on CL. Last time when we discussed this chart, our view was that the market is bound to go up. That was our main hypothesis. Actually, that was a conclusion of two different hypotheses, and it has gone up since then. I'll just show off the recording. Here is the CL chart discussion. So as you can see, we had two hypotheses, H1 as well as H2. H1 in yellow was the main hypothesis pointing straight up. H2 was second hypothesis, or a lower probability case, which was again pointing up. And again, of course, you can check this whole discussion around 11 to 17. Everything is timestamped by heading to our YouTube channel 50 Hours Market Analysis and clicking on live section. You can find the 108th webinar here. So as I said, this was our analysis. Both of them were pointing up, and the price at the time of this analysis was 83.43. It was obviously done live, just like this webinar. And here's the actual chart, and 83.43. So somewhere here we were doing the analysis. 29th, 29th, whatever, somewhere 83.43. So means somewhere here. So as you can see, the market has gone up since then. So it nothing to say. It pretty much worked out as discussed. And what about the guys here? Are you guys never noticing these things, or what's the issue here? I can see a lot of YouTube channels have a lot of participation and they don't discuss anything worthwhile. But in our case, you guys are always silent. Are you silently minting money and not interested in letting other people know, or what? If you are live, guys, keep in mind this is a live webinar, so your participation is always welcomed. So anyways, what I discussed in the last webinar pretty much played out picture perfectly, and in our own trades we were also able to capture this down leg specifically. I was able to capture this literally to the end, after which it reversed. Our bias was that some more downside can be seen, but I wanted to see a pullback and then a break, so I exited somewhere here, and that's where the market reversed as well. We'll have a quick look at that as well here. Yeah, okay, yeah, Sushil was there in our Slack, and he was also part of the move, or played the move, right? So anyways, what we were doing here, let's just quickly check. This was it, added shorts over here, and then 85.35, and then we exited 85.09. Very quick exit, and the idea was that some more pullback, and then we will look for shorting again, but that never happened. So we were actually able to capture the exact low almost precisely. So that was a trade on CL, again posted in our Slack. And okay, it looks like I have comments. I just didn't see them. Yes, that was an interesting thing. We were able to exit precisely at the right time. I had some people telling me that as well, that they were in and they saw the exact exit near the reversal. Hello, Luis. Good morning to you. Now let's see what is really happening here in crude oil right now. As you can see, there is not much to explain here. Expectation is that we are seeing some sort of impulse in the upward direction, and those not aware, we are basically looking for something like this. Currently, we are in this 3, and this will be followed by a 4th correction and then a 5th leg up. Now, it is possible that this double bracket 3 is complete here. I do not have anything that confirms or unconfirms, or whatever the right word will be for that. So basically, it could be here or it could be continuing. Both things are possible until unless we got a proof that it's complete, which will be some deeper correction maybe. Actually, I do know exactly, but I won't go into too much details. But as far as I can see, we would like to give it the benefit of doubt and look for possible long plays above 87.43. If there is a deeper correction, then again, once the correction is complete, we again will look for possible long plays. So both cases, we are considering only long only possibilities. Not interested in shorts as long as the market is sustaining above 84.84. We are not interested in shorts at all. Only below this, if the market spends some time below this, I'll be interested in that. Otherwise, not. So long story short, crude oil, we just wait and watch for longs, look for breakout longs, but look for pullback and then longs. That's my strategy right now. And actually, I don't have any trade on it right now. So we'll look for more plays on it. That's about it for that, and nothing further to add. If you have any doubts or questions, you can just post it in the comments. And thank you, Sushil. Otherwise, we'll just move over to our next chart of gold, which actually I have a long play, which we have to check what's going on. Let's move to gold. So again, without what do you call putting out any more time, let's just quickly check what was being discussed. And before even checking that, I can already tell you that whatever we discussed in the last webinar played out. And what about you guys? If you were there observing it live during our last webinar, do let our audience know. That's the whole point of doing these webinars live, to show off things in the play, not after the fact they have happened. Somewhere here we were discussing gold, and that was the analysis. Basically, we were of the view that the wave 4 is most likely complete, and even if not, we are still looking for long plays. There was a strong upside resistance at 2250, as you can see pointed on the screen right now. And the idea was that at 2250, the market may take a reversal. If the market does sustain above 2250, then we will possibly see more upside. If it does not take support above it and gives a strong reversal of some sort, then we may even look for short plays. But the main idea was long only, because the long term trend, as we have discussed so far in many of the webinars, is up. So again, you can check the whole idea, the whole play here around 18 to 22 on the 108th webinar by visiting 50s.com and clicking on live section. Now it is worth notifying you guys that if you are not attending these webinars regularly or are attending it for the first time, this is not anything new. We already knew about the gold break since a long time. As you can see, I have pointed out many times 2 months ago, gold fall continues. We were actually following every small up move and down move and making the praise accordingly. Actually, gold, I've been able to predict a lot of these moves, not just in these 2-3 webinars, but over these series of 108 webinars. But specifically, I would suggest, if you are interested in checking out this particular move, you just check the last 4 or 5 of these webinars, which have the title gold in them. We have captured a huge bit of it, and this current step lag was also discussed way before it actually played out. We have actually, oh yeah, this one. Yeah, this reminds me, we discussed the long-term play here 4 months ago, 91. And here I also discussed in the 91st webinar what is the upside potential and how it can play out. If you just check this one, you'll get an idea of how good this analysis of mine on gold has played out. Not taking too much time here. Let's see what's the current play about. So currently, what I think is happening here is 1 second. There is one thing which I have to check myself. 5 and circle 5 is going there, then right. So this is the play we are currently expecting on gold. Just to update the count wise thing. Now, if that is the play, then we don't have much to fear. It's wave 3, so we expect at least 2333 levels. And one more interesting thing here that above 2340 or 2330 actually, yeah, 30. If the market sustains above it, then we have a confirmation of exceptional bull movement to come in play. Now, what I'm really saying is that with that statement is that does not mean the market will just fly, although it can do that as well. But more so like if it crosses and sustains above 2340, then even if there's a correction, it will then be followed by an exceptionally strong leg up afterwards. So a swing play will become available to us once this market crosses 2340. I mean, I'm already long, so I might look to trail it, but that depends on multiple other things. But long story short, it's a long look for longs only market. And if you have been able to capture this long, which we discussed, as I said in the last webinar, and if you are still holding it, the better idea would be to trail it above entry, of course, and see if your luck plays out here. Because if this thing holds, then it's a super bull move. Can go to much higher levels. I think we discussed it in some webinars as well. Although the upside targets are kind of irrelevant, but let me see if I have them. I'll just quickly look at them. So not much to discuss here. I'm just checking. Nope, we haven't. We haven't marked them on the chart. But as such, as I said, look about 2330 and if we sustain about 2330 for a while, let's say touch around 2340 and so on and so forth, then this is an exceptionally strong bull activity. So nothing much to add here. If you guys have any doubts or questions, you can just put them in the comment section. I'm just checking where if I had an up. Yeah, this is the one which I wanted to check. Long-term or what do you call higher time frame analysis, and this is a trend line which is currently meeting the price mark of 2770. Yes, so that is a upside mark or upside level, will become more clear or evident on the daily chart. So this is some long-term analysis channel. So as you can see, this is in itself a very big move. So of course, a swing target, not an intraday target or anything. And from the current level, this suggests a movement of as far as 21% something. So that's about it for our discussion on gold. Let's see how it plays out, if we are able to hold it or if we have to update it, get out, get in, whatever is required. We'll see as things goes. With that being said, let's now head over to our next analysis on S&P's 500. Hello, Prashant. Good evening to you. And let's see what was being said on this chart and what's really happening right now. For that, let's quickly head over to our last webinar and see what was specifically being mentioned in the last webinar. So somewhere here we were discussing S&P's 500. Let's see if there is something more clear which I have. Oh yeah, that's about it. So what we have over here is an expectation for a wave 4. Yeah, there it is, without the jibber jabber of the counts. So what we had here was a warning sign that we may see a bigger correction here, but the idea was that the market can go up to 5324 to 5330, and only then we were expecting a bigger correction, right? However, what happened was the correlation which we were discussing between gold and S&P, it did play out on the shorter time frame, and we did see a pullback from right the discussed levels, which was as you can see here 2250. So when S&P touched this level, sorry, gold touched this level, we saw the movement on S&P as well. As per our what do you call correlation discussed, not going to go into too much detail why it worked at the time we discussed, etc. Goes outside the scope of these discussions. But anyways, what I have to say here is that S&P, we were cautious enough to consider the possibility of a bigger correction, and now let's see what the actual thing is happening on the chart. This is the chart of S&P. Last discussion was 29th Somewhere here we were discussing it live last time. Actually, that was a holiday, I think. So, anyways, whenever we were discussing this market, it has sort of gone up a little bit, touched our short-term targets, but that's not good enough. What we generally look for in this, or generally we were looking for, was a substantial move up, as I said, up to 5324 something, which is this resistance level already marked here. Did not do that. Instead, it started giving us a corrective structure to the downside. And at this point, I had to consider this bearish scenario, which I'll just squeeze on and show you guys. So here, I'm just not looking at the bullish scenario. The bullish scenario becomes active again if the market goes and takes out the last high of 5281. Above 5281, we will look for place till minimum 5324, and then the higher levels of 5394, and so on and so forth. Right, as long as we do not see a break of it, these scenarios do not become active, because we are now considering the possibility of a bearish progression. Most specifically, we are looking for a flat kind of play here, and possibly B wave either complete or has some minor up leg remaining. Again, even if it has minor up leg remaining, it's going to go and take a resistance around 5324 is what we are expecting. Right. So either the B is complete or has some upside remaining. Both scenarios suggest that bearish possibilities do exist. And if we do not consider this bearish count, which is actually super bearish because C wave can be substantially big, even if we do not consider that, our second scenario, let's call this H1. H1 is suggesting minor up movement followed by bigger down move or straight down move. Both are possible. H2 is suggesting impulsive progression here. But the thing is, the current progression may be in 4. Again, S2 is suggesting down move first, or even if there's an up move, then minor up move followed by down move. So as you can see, with both our hypothesis 1 and hypothesis 2, the probability of a bigger correction is there, and it's kind of overlapping possibility per se, right? So stay cautious. Even if you are going long, trade with strict stop losses, and of course, better to do sector plays and stock specific plays. I won't go too much into detail, as that will be a complete 2-3 hour discussion itself, but not the best time for index. Index, stay cautious. Detailed, or what do you call, specific to the stock sides and sector sides plays more what we will look for here. Nothing to add here on S&P's 500. What we'll do here is from here on go on to our chart of Nifty, which again has given pretty much precisely the moment which we were expecting. On the counter, we were expecting fifth wave up on Nifty. Let me just load up the chart and show you guys, because it has done that. And yes, even before we do discuss that, here is the quick look at our last discussion of Nifty from the last webinar, somewhere here. And yeah, this was the discussion: wave 3 of wave 4 down, and then up leg for wave 5 remaining. The idea was, if I zoom in, that we are going to see a leg which will take out this high, whatever this high was, because that's what wave 5s do. They take out the last high, and that's all there is to it, right? And so far as you will see on the live chart, let's just note the price 22343, right? So there is our actual chart, and yes, you're welcome, Jill. So as I'm saying, there's a live chart. 22343 is somewhere here, exactly here. And the idea was that it will take out this high, 22526. So it has gone and given us more than 200 points, of course, out of which 150 plus was the target, right? So go figure. If you were watching it, then of course you would have known this beforehand. So that was a play on Nifty. And what's the scenario now? What's the theme now? Well, As I did mention in our last webinar as well, that after it takes out this high, then it surely becomes a heavy risk on scenario. Now, from here on, we don't have any what do you call clear conviction. If it wants to go up, yes, the upside is open. There is no barrier to the upside, of course. Let me see if there is a target which we have discussed or what not on this chart. So, anyways, what we have over here is no barrier to the upside, but at the same time, the minimum requirement for the upside is complete. That basically means that this thing can now fall to the lows and give a correction as well, which I think we discussed in our past webinars. Let me just quickly point that out here. We discussed that from this POR, we had a possible impulse in play, and we were also able to figure out the fact that this was the 4 and the 5th was almost there, which suggested the long plays. And since the minimum requirement is over, possible that anything can happen, right? I'm not saying it will go to these lower levels, of course, but the possibility of it that it can do something like that means the minimum targets 21,300 etc. have opened up now. Let's see how it goes. Election time also can bring some wide movements and volatile movements, but we'll see as things go. Right, so stay cautious on Nifty. Long plays, again, this is more of a sector specific kind of thing. We have been able to catch the movements currently happening in metal sectors. Specifically, we were tracking Tata Steel and all that, and we knew it weeks before they made the new highs. So go figure. It was also again posted in our Slack group. So as I said, nothing to add here. If it goes up, we look for momentum plays short term and more specifically stock specific. And if it goes down, then my primary idea will be if it goes below 21910, that will be the primary alert. By the way, one fun thing which happened over the few couple of days was that we were able to capture part by part the short term movement on this chart. More specifically, all these legs, this down leg, up leg, down leg, up leg, they were all discussed in the live plays, which we, or the live analysis, which we post in Slack. Some of the participants here who are in the live chat as well were also there. I think Sushil specifically would have noted that. But anyways, I'm not going to waste any further time here. Risky plays on Nifty. Bank Nifty actually looks more bullish right now, but then again, we don't discuss it. So moving forward to our last chart, if you have any doubts or questions on this particular chart, you can just ask them right now. Otherwise, we are now headed to our last discussion, which will be the chart of BTC. Now, there is not much of anything discussed in the last webinar. As I did mention, we were very much unclear on what's happening in Bitcoin in our last discussions. I'll just quickly go over. This is the recording from the last webinar. And let's see what we were saying. I mean, I do recall we were unclear, but still, just for the sake of record, let's see. So this was one of the discussions or one of the main parts or themes of the discussion, that this whole box range, which is around 73, 74,000 or whatever, and to the downside around 60,000, this whole thing is a play area for BTC right now, and it can just move freely within these areas, as well as maybe even give a false break, as you can see with this rough sketching. So the whole idea was that we wait and watch, as there was no clear setup on Bitcoin, and that is exactly what's going on. This is just hovering within that range. Let's see the live chart for a minute here. Yeah, that is the range here. Just hovering within it. We were discussing it around here, 29th, somewhere here, and since then it has just, as you can see, stayed within the range, gone down, up, down, etc., 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 etc. Right. So the scenario remains the same. Don't want to take up any time here. As long as it's within this range, it can just continue hovering within it. We will look for long plays if the market establishes above what is this level, 73,600. Establishes means that not just break this level, but break this level and then take possible support at this level, right? So if all that happens, yes, of course, some momentum plays can become activate around 76, maybe. I'll have to look into it more detail, but I'm not really interested in it, checking it as long as it is below 73,150. So only above this alert will I'll be interested. And if we get a scenario like this, A down, B up, and C down correction, that will be best. But some momentum plays may become active. Keep in mind, this could also be a trap. As I said, a false break above this last minor upside move or a spike is very much possible. And then the market can just jump back within the range. So be mindful of all that. Kind of, if you are already holding a long position, kind of just trail. Otherwise, not a very, what do you call, swing trade friendly market right now. So that will be all for our discussion on Bitcoin, right? If you guys enjoyed the discussions and would like to see them continued, definitely make sure to hit the like button. And as I keep saying, share the content, but I'm not seeing much of a response from you guys. Now the views have, instead of increasing, have continued to decrease. So I'll also have to consider my priorities and see if I have to reduce these webinars or whatever, right? So that's about it. Thank you for staying till the end, and see you guys in the next one. Take care.